Hello everyone, I'm Ray Watterson, founder of LearnForexBasics.com. Here's your daily financial market briefing. Gold bulls have been waiting for geopolitical escalation to justify record highs. But markets often play rough games with high expectations. Despite heavy military activity in the Middle East, risk assets are actually rebounding. Equities moved higher after President Trump assured protection of the Strait of Hormuz. Cryptocurrencies pushed toward monthly highs. So, why is gold struggling? First, investors appear to be pricing in a shorter and more contained conflict scenario rather than a prolonged regional war. Second, US macro data remains firm. Services PMI printed at 56.1 versus expectations of 53.5. Private ADP employment also came in resilient. With data this strong, it becomes difficult to justify aggressive rate cuts. And without a dovish shift from the Federal Reserve, metals lose part of their fundamental tailwind. Now let's move to the technical picture. On the daily time frame, gold is showing signs of exhaustion. We have two recent bearish candles formed near relative highs, creating a developing double top structure. This is important because double tops at elevated levels often signal distribution rather than continuation. Yesterday's high at $5,379 now becomes immediate resistance. As long as price remains below that level, upside momentum is technically capped. Today's rebound is relatively small and lacks conviction. Volume is not confirming strong buying pressure. The key short-term pivot sits at $5,100. A sustained move below $5,100 would likely allow sellers to regain control of the short-term structure. If that level breaks decisively, the next downside target comes in near the mid-February lows around $4,844. Below that area, we start talking about a broader structural shift. A break under $4,850 would confirm a re-entry into the wider 2025 bull channel. The lower boundary of that channel currently sits near $4,200, though that remains a distant scenario for now. On the upside, resistance layers are building. We have a pivot zone around $5,250. Above that, wartime resistance stands near $5,400. And of course, the all-time high resistance zone sits between $5,500 and $5,600. The next major macro catalyst will be Friday's non-farm payrolls report. If labor data surprises again, volatility could expand sharply. Right now, gold is not trading like a classic crisis hedge. It is trading like a market reassessing rate expectations. And that distinction matters. This is Ray Watterson from LearnForexBasics.com. You can access free Forex education and trading psychology resources directly on the blog.